Okay, hello everybody. Good morning. My name is Ade Doja. Good morning, Dr. Ofrey. Good morning, everyone on this call. Okay, so I'm going to be reading the bio of our facilitator for today, Dr. Ebi Ofrey. Dr. Ebi Ofrey has been a medical doctor for 22 years and a business and blue ocean strategy consultant for about 13 years now. Please, can you hear me?
Yes, we can.
Oh, okay. Thank you, sir. He has a degree in medicine and surgery from the University of Ibadan, Nigeria, a certificate of geriatric care from the University of Benin Teaching Hospital, Nigeria, and University College Hospital, Ibadan, Nigeria, and a master's in business administration, MBA from UCSI University, Malaysia. Is the CEO and co-founder of Gerocare Solutions Limited, a health tech company pioneering medical inclusion by leveraging technology to provide access to medical care to underserved segments of people across Africa, beginning with the elderly and those in rural areas. Gerocare was selected as part of top 100 meaningful businesses 2022 by MB100 in collaboration with Ernst & Young, top 9 finalists for the Kofi Annan Award for Innovation 2022, top 20 finalists in the African Business Heroes Competition 2021, organized by Jack Ma Foundation, one of the top 50 business innovation in Africa, exhibited at the African Innovation Summit 2018, Kigali, Rwanda, one of the top 30 African health innovation by the World Health Organization, showcased at the World Health Forum in Cape Verde in March 2019, and winner of the Best of the Nigerian Startup Ecosystem Tour organized by Afri Arena and featured at the Afri Arena Summit 2019 in Cape Town, South Africa in November 2019, and the award for Outstanding Digital Health Innovation 2020 from the Healthcare Communications Group. He has a passion for starting and growing businesses, a skill acquired by having been involved in a few startup businesses himself. He is a public speaker, startup coach, mentor for both local and international accelerator programs, and the author of a series of books in the Dr. Ebi Ofrey Business Advisory Series, Attract Customers and Invest Like a Magnet, Becoming a Godlike of Millionaire, Innovate at Will, Silencing Dream Killers, and Success, Simple but not easy. So, ladies and gentlemen, I present to you as welcome Dr. Ebi Ofrey of Gerocare. Thank you very much, sir. We're happy to have you here.
Thank you, Ade Doja. So I believe we can begin. The rest will join us on the way. It's indeed a pleasure to be here. One of the relationships I cherish quite a bit is my relationship with Olisa Agbakoba Legal. They've been very instrumental in our journey, and I look forward to participating in more events they are doing, just as a give back to, give my services to them. So as has been stated, my name is Dr. Ebi Ofrey, and I'll be taking 2 key sessions today. Hopefully, I've pleaded for more time, but I've been given only 2 hours. So let's see what we can do with it. The first will be about venture capital, and the second will be about pitching your business. But before we begin, I think it's important to have an idea, the people on this call. So if it's possible to introduce yourself and the business you do. In the session on how to pitch your business, I'll provide a template on how to do this later on, such that when you're in any kind of setting and you introduce yourself, you make an impact. But for now, let's just hear who you are and what your business does.
Okay, we'll start with Nelson. Hello, Nelson. Can you hear me?
Hi, good morning, Ade Doja.
Good morning.
Yeah, good morning, everyone, and good morning, Dr. Ebi. Always good to see you. Wonderful to see you sharing your experience every time. Thank you so much. Okay, so
Nelson, the binoculate.
Yes,
Can
yes,
anyone hear me?
yes, we can hear you. Please go ahead. I'm sorry, Favor, please can you mute your mic? Thank you.
All right, awesome. So I think it's just been interesting to say it again, right? But for us, I'm Nelson, co-founder at Inoculate, and what we're building is the largest network for preventive healthcare services. And with our platform, people can access preventive healthcare information, vaccination and immunization services, screening services, online consultations, and travel health advice. And we're happy to also share that Gerocare is one of the various partners we're also working with in ensuring that this happens across Nigeria and then hopefully all over the continent as we move on. Yeah. Okay. Thank you again, everyone.
Awesome. Great work you guys are doing, Nelson.
Yeah, likewise.
Okay, Bayo, over to you. Hello, Bayo, can you hear me?
I mentioned earlier, my 2 hours is not enough.
Yes,
So
please,
let's
you need
move
to.
it quickly.
Okay, gifts. I guess you can go on first.
All right. My name is Gift Monike. I'm co-founder and CEO at Greener Technologies. We help small businesses and homes get access to clean and affordable electricity. Yeah.
Okay, Favor, can we have you?
I think for
Hello,
Favor, we're on the
Favor.
same team, right?
Oh, you're on the same team.
Yeah, just yeah, my team.
Okay, Abdulaziz, I think he's on this call.
Okay. Good morning, everyone. My name is Abdulaziz. So, can you hear me clearly?
Yes, yes, we can hear you.
Okay, thank you. Thank you. So, I co-founded Isusu Africa. Isusu Africa is a fintech company that provides digital platform and tools to support local thrift collectors, cooperative societies, and microfinance institutions. We're focused on advancing financial inclusion at the last mile. Thank you.
Okay, Bayo, are you ready to speak now?
Okay. I'm guessing we can move along. Can you make me a host so I can share my screen, please?
Okay, sir. Emmanuel, please, can you make Dr. Ofrey host so he can share? Thank you. Emmanuel.
Yes, I can hear you. I think I want to reach out so that Ola can.
Okay.
I think it's recording, so that's why it's holding it. I just want him to enable host sharing. I'm reaching out to Ola. In a few seconds, it will be done.
Okay. All right. So in the interim, let me just introduce how you should introduce yourself in gatherings like this.
Dr. Geoffrey, can you hear me?
Yeah.
Yeah, you can try sharing your screen now.
Okay. Awesome. Okay. So thank you very much. I'll be taking 2 sessions. As I mentioned, the first is on venture capital, financial metrics, and valuation. So it's a guide to founders. The second will be on how to pitch your business. So I intend to do this in about 50 minutes and then take 1 or 2 questions and then move over to the next. Ordinarily, I would have liked for us to be able to ask questions in between and interrupt the session, but I realize that that may, take us far out of the time. So what we can do is at intervals, I'll be asking questions so you can answer quickly, and then we can move on to the next thing. So the format we'll be using for this presentation is as follows. So I'll first of all talk a bit about myself, because I'm one of those people that believe very strongly that you're not supposed to teach what you haven't done. Like many universities where we have professors who have never done the things they're teaching, but they're teaching the theory. Fortunately, that's not the case with me, because everything you hear me do, I have first-hand knowledge about it. So again, just provide a summary of the things I've done, and then, things about me that make it possible for me to take these sessions. But look at the overview of the venture capital and angel investment sector, types of funding rounds, effective funding strategies, key financial metrics for startups, various valuation methods, and what to expect during the due diligence process for an investor. And then we'll conclude. Many of us these things might not be new to us, but it serves as a quick reminder or overview of the various topics. I might not be able to go deep into them, but it provides a guide when we're thinking about it. So first about me, as has been mentioned, I have been a doctor for over 22 years and a Blue Ocean business consultant for about 13. So I have a degree in medicine and surgery, certificates in geriatric care. So I did it is geriatric care for the elderly, and an MBA. So I'm the CEO and co-founder of Gerocare Solutions Limited, also founder of Dr. Ebi Ofrey Business Advisory Services. So it's in that capacity I'm speaking to us today. So Gerocare has won over 11 international awards for innovation, and I've raised close to $1 million in funding. So I'm passionate about entrepreneurship, having started and grown multiple businesses. And as I said, I'm a public speaker, a pastor, a startup coach, and author of a series of books. It's also important to know that I've won numerous pitch competitions, both locally and internationally. Locally in Nigeria, internationally in Kenya, and in Finland. So that's about me. So we'll begin by just looking at the definitions and overview of the various caliber or types of investors. So we have the venture capitalists or venture capital. We have the angel investors, and we have the family and friends. So for venture capital, it refers to a form of private equity investments. We have venture capital firms invest in startups and small businesses with high growth and high impact potential in exchange for ownership in the business. So there are a few key things to note here: high growth and high impact. So VCs generally do not back typical ordinary businesses. So for instance, you're starting a hotel, it's not a venture backable business. When you hear the term venture backable, it means you're going to grow rapidly and have a high impact, especially by leveraging on technology. So we have angel investors who are wealthy individuals, what we call HNIs, who provide early stage funding. So there are various stages these investors invest in. Angel investors are for very early stage, and they're either in the form of ownership and equity or convertible debt. So convertible debt is quite interesting. Might talk about that later on, but there are mainly two types. We have what they call the simple agreement for future equity, the SAFE agreement, which was made popular by YC, Y Combinator, as a way of quickly investing without all the hurdles of valuation and all the hurdles of legal agreements and so on and so forth, because it delays the discussion of valuation till a later date. But the difference between that and convertible debt is that convertible debt is akin to a loan. Just at the end of the loan, instead of paying back the money, you can convert the money into shares at the valuation of the company at that time. So it reduces the risk for the investors. So imagine taking a loan of, say, 100,000 at a 10% interest. You can either pay the interest yearly or accumulate the interest. So at the end of the day, they get 110,000 plus the 10% as equity in your business, or you pay them the money back. For family and friends, we have personal connections. So usually this is a pre-seed type of thing, where as you start the business, you talk to people you know, people will trust you, you can provide a little amount of money for you to start the business. So what's the purpose of VC funding? VCs provide not just capital, but also strategic guidance, industry connections, and operational support. I know this is the ideal, but in my experience, some have not. So when you go into this kind of relationships, don't put it behind your mind that you found your saviors. No, they can promise you heaven and earth, but the truth is that some may do it and some may not. So angels typically invest in smaller amounts than VCs, but provide critical early funding to help startups develop their products and achieve market fit. Many times these people are investing in you because they trust you or they like what you're doing and they want to have a personal impact. We all know about the Maslow's hierarchy of needs, where the top is basically being able to make an impact. So they've passed through the other layers. At this point, they want to have a sense of purpose in their lives. For the family and friends, they provide initial capital to get the business off the ground before approaching formal investors. So typical stages for venture capital, they often invest in later stages like Series A and beyond, focusing on scaling the business. But right now, they've started looking at seed investments. Usually in angel investments, they look at pre-seed and seed funding rounds, providing both capital and mentorship. And for family and friends, typically early stage funding, often referred to as pre-seed. So before I proceed, I would like to confirm, am I going too fast? Can I get 1 or 2 responses if I move forward? Am I going too fast?
No, sir, I can follow you. Sounds all right.
Awesome. So also it's important the participants also respond because I'm unable to physically see you. So the only way to know you're there is hearing what you say. So when I ask a question, I need to get at least 2 answers before I move forward. So Ade Dodger has responded. Can anybody else let me know if I'm going too fast or not?
Yeah, it's going well. It's going well. Not fast. It's good.
All right, awesome. So let's have that in mind. When I ask a question, 2 answers is the key to moving forward. All right, so the types of funds. We have the pre-seed. The purpose is to develop a concept or idea into a viable product or service. And usually the sources of pre-seed are personal savings, family and friends, very early stage angel investors. So what do these investors look out for at that stage? One is concept viability. How clear and innovative is your idea or concept? The market opportunity, the preliminary validation of the market need. So here I'll say a few things. The truth is that nobody will give you money unless you have validated the idea. That friend or family member or uncle you feel has a lot of money, the reason he has a lot of money is because he doesn't give people that have no clear concept money to do their business. If you have been doing that, well, I've lost everything. So for him to give you money, there must be a clear validation of the market need. The founder's vision, strong, passionate, and knowledgeable founding team. The basic prototype is ready. Initial development, what we call the MVP many times. So you don't go and seek for investment without starting anything at all. There must be something to show. Can you mute your mic, please? There must be something to show that you can do what you're saying, and the personal commitment of the founders. So interestingly, when we started our own business from the beginning, we got our first investment from a VC. And the reason we did not go through all these routes, especially, was because at the stage we were coming from well-established backgrounds. So I left government, for instance, at almost level 17 civil servants. I was almost a permanent secretary. I had already like 3 children. My co-founders were also director academic planning for a university and so on and so forth. So we had huge mouths to feed. But interestingly, we did not know we were going to start a startup. So we had not put money aside for that. So for us to leave what we were doing and start the business the way it should be and having our mouths to feed, we had to immediately begin to raise higher levels of funds, which family and friends would have been able to do. But most times the advice is that make sure you bootstrap at the early stages before you go and seek for investment. Because the earlier you seek for investment, the more of your company you have to give away because it's more risky at that point in time. So we look at seed round. The purpose is to validate the product market fit and conduct initial marketing efforts. So product market fit basically means you are able to have enough traction. There's a clear need for your products, and then the solution fits the need for the customer. The sources are angel investors, seed funds. There's some funds available there for seed funding. We have early VCs. So right now, most VCs have set aside some cash for the seed funding round. So at this stage, what do investors look out for? Product market fit. And the simplest explanation of this is that your product is getting off the shelf faster than you can make it. So that shows clearly there's product market fit. It's not the case whereby you've made a lot of products, you have inventory, and they're leaving your shelf very slowly. It means there's no fit yet. The moment the sales begin to far outweigh what you can supply, then you have hit that product market fit level. So the first is evidence that the product solves a real problem for a market. So in the pitching section also, I'll talk a bit about this. Initial traction, you have to show early users and customers an initial revenue generation. So at this point, you may not have generated revenue, but you need to show early users and customers, early interest. The least you can have is a waiting list to show that if I put this product out today, there are already people that have indicated interest that they will take up the products. You have market research. So detailed analysis of the market size, target audience, and a competitive landscape. Usually family and friends may not ask for all this, but by the seed round, you have to have that clearly. And then a scalable business model, a clear plan for how the business will grow and scale. Usually there's something they call a lifestyle business and a scalable business. A lifestyle business is enough to sustain you and your family. You don't intend to go to various countries and have a large vision. But a scalable business is more than a lifestyle business in the sense that you will grow quickly and you have a high impact. And then a strong founding team with relevant skills and experience. So again, I remember when we first started also, when we pitched our first investor was a ventures platform. Many of us will know who they are. But interestingly, when we pitched to them, I think there were 2 other companies that pitched exactly the same idea. But the reason why they chose us was because we had a strong team with relevant skills and experience. So many times, no matter how good your idea is, the person might consider, is this person the person to solve this problem or not? Many of us have watched programs like Shark Tank, where you hear them say this idea is viable, but I don't think you are the one to do it. And that's something they also look out for in the seed round. So no matter how eloquent you are, domain experience also comes in at this point. We have Series A. The purpose is to scale the business, enhance the products, and expand the user base. So now there's product market fit. It's akin to pouring gasoline on a fire. So you started the fire, it's blowing a bit, it's burning a bit, but you've now achieved all the basic levels of foundation. It's now to pour gasoline on the fire so it goes much more. The idea is to make sure you put everything in place, because if a business is not well structured and you pour gasoline on it, what you do is cause a demise of the business, because you basically scale all the problems, all the mistakes, and everything you've done. So be sure everything is sorted out before you begin to scale rapidly. So what do investors look out for? 1, a proven ability to grow the business and scale the operations. So you will have shown signs of the ability to grow the business. A user-based growth, significant growth in user base or customer acquisition. Revenue growth, product development, a well-developed product with a competitive edge. What's your moat? How can you protect yourself against others? And market positioning. How strong is your position in the markets? And the financial metrics. The other is Series B, C, D, etc. So you can go on and on. The idea at this stage is to further expand and enter new markets and grow the team and infrastructure. So you hear companies like Flutterwave, for instance, doing a Series C. So their goal is just to expand. At this point in time, is rapid expansion that is the goal. The sources are larger venture capital firms or private equity. So here, what do they look out for? Expansion. Plans to enter new markets and expand product lines. Your revenue and profitability. So strong revenue growth and movement towards achievement of profitability. Operational efficiency, efficient and scalable operational processes. Market leadership, strategic partnerships, and advanced metrics like detailed financial and operational metrics. At this stage, they may not go that deep into your financials, but for Series B, C, and the rest, that is the core. It's no more we will do, we are projecting, we plan to know. What have you done? What you have on ground to show that all these things you're saying are very doable. And the final one is an IPO, or public offering. So to raise capital from public investors by offering shares on a stock exchange, the outcome provides a significant capital and liquidity, but also subjects the company to public market scrutiny and regulatory requirements. So what are investors looking for here? Sustainable revenue, profitability, market dominance, operational maturity, compliance and governance, and investor confidence. So again, I'll just pause here. Are we all together at this point, or is it again moving too fast? You know the rules.
We're together.
So there are no questions for now. Let me just be sure. Because I think it's
Not
a lot of
thinking.
information packed into a short amount of time. All right, so let's move on. So what are the funding strategies? One is identifying the right investors, extremely key. 2 is building relationships. 3 is crafting a compelling pitch. And 4 is due diligence preparation. So for identifying the right investors, you need to find who is a fit for you. Ensure the investor has a track record and interest in your industry and stage. It's very important you find out these things, or else later down the line, you will find out there are conflicting thoughts, conflicting visions, and can lead to a lot of disagreements. First of all, not every investor is the investor for you. There's something they call dumb money and smart money. Some people say everything is dumb money because no matter how smart they say it is, they still don't add more to that money they give to you. But the idea is to look for other things apart from the money they're bringing in. Who else have they invested in? Those people they invested in, what are they saying about them? Are they conversant about the happenings in your industry? All those things are very important at this stage. Does their vision align with your long-term vision, or do they intend to change drastically what you intend to do? So it's important to identify the right investors and don't waste your time pitching to people that are not a fit for you. What people do many times, the mistake they make is that they just get a list of investors and start pitching to everybody. You realize that 20% of them are the only ones you need, but you spend 80% of the time talking to people that will never invest in your business and get a lot of no's and also get discouraged. But if you pick them right, there's a higher likelihood of getting a positive response. So build relationships. So networking is key. Attend industry events, join startup accelerators, use online platforms like LinkedIn and so on and so forth. Introductions are important also, leveraging mutual connections and warm introductions. Because of the number of founders out there seeking for funds, one of the easiest ways to get funding or to get access is by introductions, mutual connections. So peradventure, you are seeking to speak to an investor and you know another company they're invested in. It's better to go through that company to the investor than to go to them cold. Because to an extent, the person that invested in, they have a certain level of trust in them. And also, he also knows what they're looking for and guide you aright. So though cold outreach might also be okay, but it's important you find warm opportunities. Their investor introductions, other investors, their other startups introducing you, or accelerator programs introducing you. That makes it easier for you to have access to these people. Then we'll talk about it later on also, crafting a compelling pitch. So I won't dwell much here. There's an entire session of 1 hour on how to craft your pitch. Then due diligence preparation. So financials, keep detailed and accurate financial records. So one thing that saved us in the early days was that we were able to set up a good financial structure. I remember in year 1 and 2 already, we had audited accounts, which helped us a long way. So you don't think my business is small, I don't have to focus on those things now. Focus on them. Because if you're planning to scale your business, what you want to do as a large company, start doing it now. The benefit for us is that we started from Ventures platform and they had put all the basic things in place, legal frameworks, financial frameworks, and everything. So it's easier for us to move forward. But at the stage you're in, have those things in place because they can be the deal killers. You have a conversation and get to the last stage and realize some small things at this point is what messes the whole thing up. So your projections, be ready with realistic financial projections and scenarios. So here, what I'll say is we need to also know the type of investors we're talking to. Fortunately, I've had experience with both local investors and international investors, and there's a marked difference in what they see as realistic. The truth is that no matter how you push the business, put the things in place, Nigerian investors always doubt your projections. They always feel it's not possible. But when you pitch to an international guy, he wants to see the potential and thought behind it. As long as there's a logical thought behind it, he's very willing to accept it. So you have to know who you're talking to and how to frame it so as not to shoot yourself in the foot. Even if it sounds realistic based on your estimation, be cautious when speaking to Nigerian investors. Documentation. So how are your legal, operational, business documentation in order? Depending on the stage you're in, it's always good to have what they call a data room and have everything prepared ahead of time. It's not when they ask you for it, start putting it together. It should always be ready somewhere. So that when they need it, either you give them access to the data room or give them access to certain parts of the data room based on their own requirements. So we have 4 things here: identifying the right investors, building relationships, creating a compelling pitch, and due diligence preparations. So for the key financial metrics for startups, one is the revenue metrics, the other is the customer metrics, operational metrics, and profitability metrics. For the revenue metrics, we have the monthly recurring revenue. That's the amount of revenue the company expects to receive every month from its customers. And we have the annual recurring revenue, the amount of revenue a company expects to receive annually. And we have your revenue growth, the rate at which the company revenue is increasing over time. Those are quick terms you need to have at your fingertips. What's your MRR? What's your ARR? What's your growth rate? Those numbers should be in your mind and in your head at every point in time. We have the customer metrics. So your customer acquisition costs and your lifetime value are extremely important figures to have in mind, because that determines how profitability or how viable your business is, because your business can fall based on your customer acquisition costs and your lifetime value. So customer acquisition cost is the total cost of acquiring a new customer, including marketing and sales expenses and whatever is done to acquire that customers. And then your lifetime value is total revenue you expect from a customer over a duration of a relationship with that customer. It's very important that the lifetime value is able to justify the cost of acquisition. So if the cost of acquisition is, say, $20, and your lifetime value is probably 18, let's just, for lack of a better explanation or example, let's use that. If it's not able to justify it, then it means you are losing money constantly. So for every customer you acquire, you are losing money on that customer. However, if your cost of acquisition is, say, $50, but your lifetime value from that customer is, say, $500 or $1,000, it makes a lot of sense. So the key thing to note here is not the cost of acquisition, but the lifetime value of that customer. I can spend $100 to acquire a customer if I'm expecting $5,000 from him in the long run. Then your churn rate is the percentage of customers who stop using your product or service within a given period. So every month, what's your churn rate? How many customers are using you this month that are not using you next month? For some companies annually, how many are using you this year that are not using you next year? If it's a one-off product, how many have used you and how often did they come back to you? We have operational metrics. So these are your burn rates and your gross margins. Your burn rates is the rate at which a company is spending its capital before generating positive cash flow. So how much are you spending monthly? Your runway is how much money do you have to operate? So the amount of time a company can operate at its current burn rate before running out of funds. So if you don't get any more money into your company for the next year, how many months can you survive on your burn rates? So if you're spending about $1,000 per month and you have $10,000 in the bank right now, it means you can last for just 10 months without customers bringing money in or an investor bringing money in. That's your current runway. And then your gross margins are the difference between your revenue and the cost of goods sold. So that's not the net margin. It's just, this is how much I generated. This is how much I used to generate it. So for Gerocare, for instance, to provide doctor visits. So our cost of service is the cost of a doctor, cost of the drugs we provide, cost of the tests and all those things. The cost it costs us to provide the entire service for the user. We're not adding rent, we're not adding salaries, we're not adding other administrative costs. Just the cost of providing that service. When you take that out of the revenue, that is your gross margin. And we have profitability metrics, the earnings before income tax, depreciation, and amortization. It's a measure of the company's overall financial performance. So this now has the gross margin minus all the administrative charges, minus all the marketing charges, minus all the rents and all those things. You then get your EBITDA. And your net profit is after you take away the tax and other expenses from it. So that again is a quick rundown on the financial metrics. Let me see how much time. Okay, already over 11:40. So I'd like to finish this by 12 and go to the next one. So the valuation methods, we have pre-money and post-money valuation. So pre-money valuation, the value of a company before new external funding is added. And then post-money is the value of the company after the money has been added. So if you are raising, say, $300,000, for instance, the value of the company before that 300,000 gets into the company is the pre-money valuation. So I can say probably I'm worth 1.5 million as pre-money, and I'm worth 1.8 million as post-money. Common valuation methods. So we have comparable company analysis. So value the company based on how similar companies are valued in that market. So you look around at other companies in your sector at the stage you are in and find out what they are valued, so that you don't come and say something that is so outlandish that automatically it discredits every single thing you said. You could have pitched a very good idea, good problem, good solution, good market, everything, and get to valuation. And because of the value you placed on your business, you lose the interest of everyone because they feel you are not just realistic at all. So it's always important to know other companies in my sector at this time, at this stage, what were they valued as, and use that as a benchmark to estimate what your valuation should be at that time. It may be a bit higher if you have a credible reason for those things, but it should not be markedly far off those areas, even if it's true, because you have to be able to justify it. But as I mentioned many times, the number itself can totally put people off from the get-go, especially if your revenue doesn't justify it in any way. We have precedent transactions. So using valuations from recent transactions from similar companies. So apart from their valuation, their recent investments, what are they valued as? And also you can use your own last funding round. So for instance, in your last funding round, you are valued as $1 million. That should serve as a precedent. If I got $1 million, I was valued at $1 million in December 2023. In June 2024, I cannot say I'm 5 million. It's highly unlikely. If somebody's coming in January, you most likely would use the same valuation of December. So you must have those things behind your mind as a benchmark. For us, many times we focus on using the last valuation, the time that has passed, and our revenue projections at particular points in time. So we have discounted cash flow, value of a company based on the present value of its projected future cash flows. So you can do, for instance, a 5-year projection and then discount the value. So there's a formula for it. I think during my MBA, they taught us how to calculate it, but right now, there are actual formulas online, there are formulas in calculator. So just press DCF and then to calculate that number down the years, you're supposed to be. So if the 5-year projection, calculate the value then, and then do the discounted cash flow for what that value means right now. We also have the venture capital method. This is a 2-step approach involving estimating the company's terminal value when it wants to be sold and discounting it back to present value. So the key is also to use multiple methods. You can't use one method alone. So you use 1 or 2 methods or 3 methods and basically find the weighted average and understand that this is the value of my business. This is how I came up with it. I use the common valuation method. I use the discounted cash flow. I use the venture capital method. And this is the average I've gotten from everything. So, but you must be able to basically itemize and describe clearly how you achieve this. Unfortunately, what many people do is that I have a company, I need 100,000, and I'm willing to give away 10%, then I value my company at 1 million. Nobody will accept that. There must be a real reason why you're coming up with that valuation. So what are the factors that influence valuation? 1, the market conditions, economic conditions, and industry trends can affect valuation. Many of us have heard the term, we're in a funding winter. Because of the recent events at this moment in time, the market conditions are making it very difficult to raise funds. Prior to this time, it was a bit easier because people funded you based on the projections, based on your vision, based on your plans. But right now, people want to see the actual revenue, the actual traction before they come into it. We have the competitive landscape, the presence and strength of competitors. We have founders track record. So we know that if you have exited one or more businesses, it's more likely you get funding easier. So previous successes or failures. I know some found from investors that say I only fund founders who have failed at least once. That's their own philosophy. You have business and revenue projections. So the sustainable revenue expectations. So the factors influencing valuation are market conditions, competitive landscape, the founder's track record, and business model and revenue projections. I think this is the final. Of financial projections. Sometimes, especially Nigerian investors can ask you for your actual bank statements. Although many international guys don't do that, but Nigerian guys can even hire an auditing firm just to look at your numbers. So make sure you have everything ready and don't fall flat at that point, especially because the investment community is quite small. If they see any kind of hula baloo or any kind of mistrust in it, the story spreads very quickly. So make sure by the time you get to this point, whatever you're saying is true. We have legal due diligence. So review of legal documents and contracts. I'm sure AOL has done a great job with you on that, and will do a great job going forward. So I'll not dwell much on that. Operational due diligence, evaluation of your business operations and processes. Reviewing your operations to ensure they are efficient and scalable. Assessment of the management team, evaluating their experience, skills, and their cohesion of the leadership team. So they may all be individual A players, but how well do they work together? And market due diligence, analysis of the market size and growth potential. If you've done your pitch right, this will have been taken care of. We must show some evidence to back all the things you're saying. Competitive analysis, understanding of your position relative to your competitors, and competitive dynamics in your industry. So in conclusion, the key points. One, understanding the different types of investors and funding rounds is extremely crucial for effective fundraising. Building strong relationships and crafting compelling pitch are essential fundraising strategies. Tracking financial metrics helps making informed decisions and demonstrating growth to investors. And various valuation methods can be used to determine your startup's worth, each with its own strength and applications. And then being well prepared for an investor due diligence can significantly smoothen fundraising. And finally, for this part, stay informed. So consciously educate yourself about the industry trends and best practices. Keep on building relationships. Networking, relationship building are keys to finding the right investors. So I have an investor that always says you are always raising, always have that in mind. Everybody you speak to is a potential investor later along the line. So make sure you're able to manage and nurse that relationship. Be prepared. Always have up-to-date and accurate information ready for potential investors. So I think that'll be all for this segment. I'll take a few questions before we move on to the next. So we have from now till 12 o'clock to jump into how to pitch. And I strongly believe that we'll have one or two questions. So let's speak. So even if you don't have questions, I would like to know what impacted you the most, something you've not heard before, or something you've heard that hit you differently this time. So every one person will say something before we move on. Every single participant here. So let's begin.
Okay, I believe we'll start. Okay, Gifts, please, can you start? Hello? I noticed you raised your hands at some point.
Yeah, I was trying to say the slide was not moving on my own end, so I was thinking maybe it's for my own end or it's a general thing.
Okay, all right.
Are you hearing?
Yeah, but I can hear. I followed through, but the slides were not moving. So I was like, maybe it's normal. So just the front page, really.
Oh, okay.
Okay, so
Anybody has experienced
it's
same
time
thing?
for questions, actually. So yes, Gift, over to you. You have any questions?
If you don't have any questions, what significant thing do you take away from this? So I'll know whether to do the next class or not.
All right. So like the valuation part, right? So spoke about using different methods and having the average. I think the essence of that is to be able to build it in mind of the investors or potential funders, that you not just speak out any kind of valuation, actually do your homework in trying to be very conservative, and at the same time you are still optimistic, right? So having these different options and narrating to them the way you got it matters a lot, because I've seen a lot of pitches where people, investors actually got angry at the point because maybe the way the person valued it, his company, and it was so high and stuff like that, and the person couldn't even like give reasons why he was able to go that point. So that's one thing I'm taking away.
Perfect.
All right,
Next question.
Nelson.
Okay, not so much as a question. So, but I think one thing that was really profound and part of what Dr. Ebi was able to also share was around having that data room prepared always. I think that's very important, and just taking that again as a reminder to ensure that our data room is up to date. And I think the other thing was also on the side of financial reporting and how that is kind of like very important no matter the stage you're in. So yeah, definitely that's also something we've also already started to work on a bit more on our end. So those are like two key things I think are very important in terms of moving ahead, especially approaching funding. And Dr. Ebi, thank you for pointing that out again today.
All right, Abdulaziz.
Yeah, thank you very much. I think for my own part is I don't know if you are trying to pitch to an investor and they are looking at your financial projections and assumptions. So what if they are looking at, okay, what kind of the arrangement, best arrangement can one see with them if they are considering like two options. One, if the projections you are showing them in terms of the revenue, can you have like a sharing of profits, the net profit? They just give you the money just like maybe as a loan or something like that, and or instead of taking it as an equity. But if that business has the potential of just get the revenue, get the funding, financing from them, and you are able to make traction, revenue, and give them their agreed profits. And anytime they want to get their capital back, they can give them the capital instead of going to sync with equity. So I don't know what best advice can you give on this. Thank you very much.
So we'll talk about that in the beginning of the second part, but it's important to note the kind of investments you want. What you're talking about is basically a loan, it's just a debt, straightforward. So you can approach them and say, look, I need a project financing loan, or I need a loan for this period. It's not an investment. An investment is investment for shares, ownership in the business. If they are paying you the money back with interest, it's a loan. So even if you are ordinarily sharing only the profits, that's still what an investment is. But at the end of the day, people get dividends, that's profit sharing. At the end of the day, you may decide that as the board, we have profits, but we've decided to plow it back into the business. But profit sharing is an investment. So how will the profit be shared is based on the ownership of the company. That structure determines how you share that profits. However, if you want it for a project alone, so for instance, Gerocare can say we are going to Kenya, we need funds for that project. I want to share profits on that project. That's different. So you're investing in that project and sharing profits on that project. That's a different game entirely. So you must be really clear from the get-go on what you want. If you are looking for a more amount of money to pay the person back, that is a debt, not an investment. So that clarity needs to be made. For those that see various programs, you understand that there are different ways of paying people money back. As I mentioned earlier, there's convertible debts. So in convertible debt, what happens is they give you a loan of $100,000. at the end of 3 years, I want my money back with the interest. But at the end of 3 years, they can decide, okay, I've now followed you. I'm now more comfortable in your business. I now want to invest the money in your business for shares. However, 3 years ago, they were not that confident. So the idea of convertible debt means I can still play safe and watch your company grow, get my interest. At the end of that period, if I'm satisfied with the company, I can decide to now put it in and collect shares. If I'm not, I get my money back. Those are ways you can look at it. But if you want debt, focus on debt. If you want equity, focus on equity. But convertible debt is it's in your can having it. You can have a debt, but still have the opportunity to convert it to shares later down the line. And interestingly, in convertible debt, the focus really at that point in time may not be the valuation. It's just the ability to pay that money back that they'll be looking at. So all your projections, all your flow is showing them that you have cash flow. And at that point in time, I'll be able to pay you your money back. That's the key thing. But at that point in time, they may decide, okay, I like the company. I want to convert it to shares in the company at that time at the valuation we agreed upon. The interesting thing also is that at the early stages, the convertible debt, you agree that when you are converting, if you decide to convert, you are converting at this valuation. So for instance, you say in 3 years' time, you convert at $5 million. So no matter what the company is worth at that time, they've pegged their valuation at $5 million. So that also gives them a less of a risk and assurance that, at that time, the risk they took will pay off for them. So those are the things you can take.
Thank you very much. In addition to that, thank you very much, sir. I want you to clarify, and you are, at least based on the experience, you're in best position to advise. Let's say the kind of business model is like a project, right? That project is highly seen to be profitable or sustainable with the financial projection of the cost and the revenue. So they want to look at, okay, let's invest on this project, right? And if we invest in this project, it can now even be breaking into units that they can co-own some of those projects. We can just manage it for them, right? It's not that maybe they are owning, maybe they may not really want to dive into the shares at this stage because of the valuation and the likes. They just want to focus on that potential project. So, and we've given them the cost of financing the project. We've also showed them the revenue projection, and they said, okay, they want to go and we want to manage. So if that project is now yielding revenue, they are like, okay, anytime we want to get our revenue, if you want to pay us by every month or every quarter or every 6 months, we can agree, right? Because it's tied to that project. So what kind of arrangement do you feel is best suitable for that purpose, right?
So the thing is that there's still a level of risk attached to it. So for instance, if it's a project that so what many people do is project financing, for instance. Somebody has told you in particular that this thing you are doing, I will pay 5 million naira for it if you are able to deliver it. They've given you a letter of intent or indication that they've ordered it and they will give you this money in 5 months. What you now need is the money to execute the project. You can use that letter of intent or that assurance or that invoice or whatever it is to go and seek for funds, because that's the clearest way you can show them that your money is safe. I already have the money paid, but I can't touch it. What I need is to create this solution, run the project, and get to the point whereby I can collect the money. That's what I need the money for. People will be assured. There are even companies that actually purchase that kind of invoice and give you the money up front, but they add something to it, kind of about the structure itself. That can be done. If it's clear that this project is worth 5 million, the person that gave me the project has said, okay, 5 million is here once you're ready. I now use that paper and go and source for funding. It's very different. Otherwise, there's still a risk. If I say when I create it at the end of the period, people will buy, but nobody has ordered this. It's still very risky for me. What if you finish and nobody buys it? What will happen to me? So in that sense, what happens is when they say high risk, high reward, it means you may put in the fact that there will be a higher level of interest or higher profit share for that person for coming at that point, because there are no certainties on what will happen. Some people will request for collateral. If they do, then there's reduce the risk. But if there's no collateral involved, the thing must be worth his while, so that if it succeeds, there's a high return. If it doesn't, he hasn't lost, he has lost, but he knew going up front that this was going to happen. So it's to make the deal as clear as possible and understand if there's a high risk, you have to be willing to pack a lot more at that early stage.
Thank you very much, sir. Thank you, sir.
Okay, Bio, can you hear me? Hello, Bio.
This Bio is not here.
Okay, I'll move on
I know Bio is
again.
here.
He was here because he unmuted his mic
Bio,
right as
Bio,
soon as
put
we
on
started
camera.
talking.
Let's see you.
Bio, if you're here, please
I'm not
put
sure
on your
Bio is here.
camera. Okay, let's go on to Stanley then. Stanley, can you hear me, please? Unmute and ask your questions or make your comments.
Right before 1 minute.
For now, I don't have any questions.
Okay, so I'll just let that go. We're already past 12, so let's move to the next thing. So the next one, we're talking about how to pitch your business. What I'll do, I'll give us a small exercise. So I'll play a video of one of my pitches, I think it was 2 years ago. I would like you all to analyze the pitch and constructively criticize the pitch. What would you have done differently? What would you expect to see that wasn't there, and so on and so forth. Once we are done with that, I'll go into the presentation proper. Are we okay? Yes, no, are we okay?
Yeah, very well, very okay. Good.
So I'll just share a video, just make your comments. What do you think about it? What we have changed? What's not there? What we like to have seen? Stuff like that. Can you all see my screen?
Yeah.
Yes, sir.
Okay.
See Dr. Ebi there. Beautiful. Okay. Dr. Ebi, we see a great company here over in Africa. Again, massively scaling. Dr. Ebi, tell us what you're doing in Africa and why this is so important.
All right. So hello, everyone. My name is Dr. Ebi Ofrey, co-founder and CEO of Gerocare. And at Gerocare, we're totally transforming healthcare delivery in Africa, beginning with the elderly and beginning in Nigeria. So why the elderly, you may ask? 75% of people in developing countries lose one or both their parents to untimely death or have them severely incapacitated by conditions that could ordinarily have been prevented all before these people at the age of 40. And then simply because it's an absence of structure for care for these people. This may just sound like a statistic to you until you have a personal experience like I did. A few years ago, in the space of 1 year, my father had 2 strokes. And this was not because there's nothing I could have done. I was simply living and walking far away from where he was. And this condition is not peculiar to me, as there are millions of Africans living and walking far away from where their parents are. And the only time they hear anything is when something goes tragically wrong. And so my co-founders and I decided to make it our mission to solve this problem and ensure millions of people don't have to go through the same thing I went through. So Gerocare makes it extremely easy for Africans wherever they are in the world to subscribe for regular doctor home visits for their parents in Africa using the Gerocare mobile application. They simply download the app, input their parents' details, and make a payment. Immediately, these parents are matched to a doctor who lives nearby, who begins to visit these parents at home at least once a month and give us, the children, real-time feedback wherever we are in the world. And we've been able to do so because we have successfully created a cloud-based hospital structure that provides the entire experience of the clinic in the comfort of the home, from doctor home visits to tests at home to drugs at home, and even complementary services like caregivers and physiotherapists. And we are glad to say that for over 5 years now, we've been able to consistently and successfully solve this problem by providing care for over 100,000 elderly people, giving them more time to spend with their children and grandchildren. Right now, we make money in 3 ways. The first is the subscription, with individual plans with people like you and I making monthly payments for our parents. We have enterprise plans that involve partnerships with organizations to bring on board groups of subscribers at once. We have the non-subscription or on-demand plan where you pay only when you need the service, and we have referral commissions of every other service accessed via our platform. And the people really love what we're doing, as evidenced by our numbers. So for the first 3 years, we grew 2x year on year. And on the 4th year, we grew 5x. And we have found the formula that works. And we believe we can continue these multiples over the next few years, such that by 2025, we'll be making an annual revenue of $100 million. And so it's clear we have a great product, but we also have a great team led by myself. I've been a doctor now for over 20 years. I have a master's in business, for which I graduated with a distinction, and I have a certificate in geriatric care. My partner, Dr. Ajibola, is a neuroscientist, expert in healthcare marketing. He has a PhD and was involved in the implementation of the National Health Insurance Scheme for Nigeria, and has also been practicing for over 25 years. Our technical co-founder, Bruce Lucas, has been building and developing software now for over 20 years. And we have been recognized for our efforts internationally. The World Health Organization chose Gerocare as one of the top 30 healthcare innovations in Africa in 2019. In 2020, we were selected as a finalist for the Africa Business Heroes Award by the Jack Ma Foundation. In 2018, we were selected as top 50 business innovators in Africa by the Africa Innovation Summit. We've also been showcased with BBC, and more recently, ongoing, we are finalists in the Kofi Annan Award for Innovation in Africa. And we strongly believe that Gerocare is the future of primary healthcare, not just in Nigeria, but all across Africa, converting every home to a primary healthcare center. And we are well on our way to achieving this. But to get there much faster, we're looking to raise $1 million at a valuation of $10 million for staffing and quality assurance, for expansion into Ghana and Ethiopia and marketing, for infrastructure, both tech and medical equipment, and research and development. And this is just the beginning. We are building the Amazon of digital preventive care in Africa, beginning with doctor home visits. Then we move to telehealth, wearables, and marketplace, and an Uber-type care for the elderly, leveraging on our already existing and trusted brand name. So we invite you to join us on this journey as we totally revolutionize healthcare delivery in Africa forever. Thank you very much.
You make me sound like I have no energy. I love when you do your presentations. It's huge. And again,
all right. So interestingly, that was a few years ago. And again, based on the people who were pitching to and the accelerator program we were part of then, there were certain things that were told to us as regards to, the Americans push you further. So our projections were a bit more exaggerated simply because of the people we are pitching to and what they're interested in. So obviously over the years, it didn't pan out exactly that way, but that was just the thinking and the coaching from the accelerator coach at that time, especially for the American investors, because they are always good with large numbers and things like that. So having said that, I would like to hear our thoughts. So again, please, let's do this quickly.
So I love the part of where you had a personal story to it, so and the flow. So the flow from the problem, like the first presentation, we already know what Gerocare was all about, right? Just from the first few sentences, then you're now connected to personal experience. I think that's went so deep to show how passionate the person, at least the founder, is going to be in the business. So that's I think the whole presentation was actually amazing, really. So yeah.
Okay. Anybody else? I don't think 2 more before I move on.
Nelson, Stanley.
You guys
Hello.
help me.
Bayo.
Bayo is not here. Leave Bayo alone.
Abdulaziz, do you have something to say?
I think
Where is everybody?
it was really nice. It's very
Okay.
nice. Yeah.
Okay.
Nelson.
The thing is that That's why, Emmanuel, I told you guys, I want physical session. This virtual session doesn't do it for
I
me.
was just going to say, you people want me to talk
Yeah.
about Dr. Ebi's speech. Dr. Ebi is the king of pitch when it comes to when it comes to our ecosystem. But I think just to make a couple of comments, right? It really was what was great about it was the context setting, and that's something Dr. Ebi always does every time. So setting the context very well from the problem, the transition down to the solution, and then all that Gerocare had achieved. I think everything was spot on. I'm trying to, so Dr. Ebi was at the start telling us to find the areas where the improvements could have happened. I kept watching critically to look for the improvement. But this one was very fluid, actually. This was very fluid.
So usually what people point out is the whole, competitive landscape. We didn't mention the competitive landscape. We didn't mention the market size. We didn't mention the this and that. But the truth is that most times you will have a master deck that has everything. But then you tailor it based on who you are speaking to and take out some slides and leave some slides. You must have a deck that talks about every part of the pitch.
Hello?
I think it's a network glitch from his end.
Yeah, I believe so. Hello, sir. Can you hear us? Hello, sir. Can you hear us?
I can hear you.
Okay, we lost you for a second.
Okay. I was trying to bring up the other slides.
No problem. I was going to say the pitch was so well done. If I had money, I would have invested.
So I'll give you the content and the formula right now. Just trying to pull up. Okay, awesome. All right. So you know who I am, so I don't go through that anymore. So the objectives of a good pitch are three things. One, to captivate, to validate, and to motivate. To captivate the audience, your pitch must be able to break preoccupation. No matter what they are doing, they should stop and listen to you. Especially because most times you're not the first person, they've been hearing pitches, even if the competition, that's even worse, because you may be number 9 that was pitching that day. So I remember at a point in time, in the early days of Gerocare, I was called to pitch at a cooperative annual general meeting. And unfortunately, I was placed during their lunch hour. So everybody was eating, doing other things. But the moment my pitch started, everybody stopped and started listening. So that's what your pitch is supposed to do. From the beginning, grab everybody's attention and hold their attention throughout the presentation. So you captivate them, and then you said something that is huge. You said something that is, deep or outlandish or sounds very audacious. You must be able to now validate everything you've said based on what you're saying. And finally, you motivate them to take whatever action you want them to take. Is it a partnership? Is it funding? Is it expansion? Whatever it is, you must now motivate them. So how do you behind your mind? The first part of the pitch is to captivate, and then you validate, and then you motivate. So a great pitch is made up of three things. 1, the audience. 2, the content. And 3, delivery. The audience, the content, and the delivery. So for the audience, so when I was speaking to the guy earlier on about the types of investors and types of investments, this is where it comes in. So you must know the type of people you are investing or talking to. If they are straightforward investors, their interest is a return on investment. They don't care about anything else. Are you going to make money? Don't play any tiny violins for me or any pity stories. are you going to make money? That's their call, no matter how impactful the business is. So I remember was speaking to some guys one time. They now said at the end of the day, after they've cleaned their tears, how much are they going to make? So you hit them, you touch them, but that's not their interest. How much are you going to make? So if that's the kind of investor you're talking to, you can talk about the problem story, solution story, but don't spend much time on it. Spend more time on the traction, on the revenue. If you're talking to grants and donors, their own purpose is impact. How many people can you impact? Many times their focus is not even the money. Their focus is how much impact can you make? I remember in the early days when donors came for HIV and AIDS, they were not caring our money back. They are providing free this, free drugs, free that, free that. To pitch to them, you must be able to show impact. Then we have the blended finance, that is social enterprises. Most of the businesses now fall into these categories. I'm solving a social problem, but I'm using orthodox business solutions. So it's a sustainable business. Nowadays, people don't want to just invest in a social problem and keep on investing. Companies have also started shying away from CSR. We don't just give you money over and over again. I'll give you money and be sure that the first money I give you is able to be enough to grow that business. So you are solving a social problem, but with orthodox business solutions or techniques. And then finally, we have competitions. So the truth, so I mentioned earlier, I've won a few competitions and I've also been judged in a few competitions. So I know both sides. The judging criteria, for instance, the competition is broken down, say, into 5 segments. Maybe the content, eloquence, traction, blah, blah, blah. So it's important to understand the judging criteria first before you build that pitch for that competition. So you touch every area. Some people might speak very eloquently, but no matter how eloquent you speak, it's only 5 marks. Some people might talk about the problem and solution. No matter how big the problem is or how beautiful the solution is, it's only 5 marks. You must focus on the revenue. That's only 5 marks. So once you know the template for the judging criteria, you're able to build your pitch appropriately. And usually for competitions, what I do is when you understand the criteria, your last slide should summarize everything. So your last slide, you will say, remember, then you now touch every part, the traction, the problem and solution, the revenue, just touch everything succinctly so that if they've forgotten at any point in time, they remember it and come back to you. So you must understand who you're talking to. Is it a straightforward investor, mind VC, mind or return on investments? Are they grants or donors? Are they grant donors or a blended finance social enterprise? Nowadays, everybody's focused on SDG goals and stuff like that. Are they ensuring you're focused on a goal while making money? That's a social enterprise. Or is it a business plan or pitch competition? You have to touch every area very succinctly also. So we go to the contents. So for content, there are 3 unbreakable rules of pitching. I'm sure everybody will have noted that in my pitch. Storytelling is key. The truth is that people don't want to be pitched to, people don't want to be lectured to, but they want to be told a story. For all of you that heard the pitch, it was one story from beginning to end. There was no, now I'm talking about the problem, now the solution, or the traction. No, it was one cohesive story. So people were engaged throughout the story. It was emotional in the sense that I felt your pain. So I remember in the early days of Gerocare, what we used to do was in Abuja, we used to go and talk in churches. And I remember that after I speak for 3 minutes or so, at the end of the session, we were able to have a few people come and sign up simply because they could connect with that story. When I say my parents felt I had neglected them, it's the same thing my parents are telling them. When I say my father had a stroke, it's the same thing they've experienced. So they were able to connect with me visibly on what I was talking about. And it was memorable. They could go out and tell somebody about it. The truth is that many times when you speak to somebody, it may not be the actual decision maker. Many VCs now have what they call scouts out there that will hear your story and take it back to the principal partners. When a person hears your story, is he able to convey what you said clearly to the person that will make the decision? So you must inculcate these 3 things. Storytelling, it must be smooth, it must be interesting, it must be engaging, it must be emotional, and it must be memorable. So some people will be saying, but I'm in a Greek business, how can I make it emotional? I'll tell you as we go along. So for storytelling, there are 3 key things. There are people or situations that are involved, there are challenges that are being faced by them, and that's how your solution is solving this challenge. That's the story. No matter what your business is, it may be clean energy, it may be environmental friendliness, it focuses on people. It's touching people's lives. And so they're a key component of this thing. So the people it affects, the challenge they are facing, and your solution. So this basically covers 2 slides, the problem and the solution. So unfortunately, I have to break it to you that nobody really cares what you're doing. I guarantee you. A mentor of mine used to say that people are only interested in one station, WIIFM, meaning what is in it for me. Until they hear that part, they're not interested in anything you're saying. So it's always important to make sure the problem is clear and compelling enough for them to want to be interested in the solution. The key is that when talking about the problem, you don't mention the solution at all. You talk about the problem and ensure they're able to grasp the magnanimity of that problem. They're able to want to help you solve that problem. So if it's not a problem they're facing, they want to help you solve the problem because it's a big problem. A problem can either be a paper cut or a finger being chopped off. It depends on how you say it. So if a problem is a paper cut, when you have a paper cut, what do? Just put it in your mouth, you lick your finger and forget about it. But if the finger being chopped off, that's how bloody the problem is. Everybody around you, rushing around you, trying to help you solve that problem. And that's how you must place the problem. Even if it's an agricultural problem, if your solution was not existing, how bad will the people suffer because it does not exist? You must paint that picture so bloodily and so clearly that anybody listening to you wants to join that train and solve that problem with you. Once you're able to paint that picture, everything rises and falls on the magnitude of the problem you are solving, how important it is. The truth is that I have another lecture that talks about identifying the problem and setting the problem right. Because here, it's key that you are able to find the roots. There's something they call the 5 whys. If there is a problem you are talking about, there's a reason that problem exists, a reason why it affects people. Try and connect it to it. Will people die? Will people suffer? Will economies crash? Major issues should arise based on what you are doing. If those issues are not arising, you need to find a way to explain it such that they get that picture. Once they have that picture and understand this is a problem to be solved, then you have them on board. They want to follow you. So your first few slides will be problem and solution. Maybe how it works will be there. So that's that first part of captivating the audience. So in the beginning, remember I mentioned that I will talk about how to introduce your business. So peradventure, you are in another program and they ask you, introduce yourself and what you do. That's an opportunity to market. They say, always be marketing. You don't know who is there, who is listening. There are many times I've introduced my business and based off that alone, I've had further discussions. So for me, for instance, if you say introduce yourself and what you do. So my name is Dr. Ebi Ofrey, CEO and co-founder of Gerocare. And the main problem we are solving at Gerocare is the fact that as a Nigerian, before you get to the age of 40, there's a 75% chance you will lose one or both your parents, and that's not acceptable. And that's why we provide regular doctor visits to parents and elderly loved ones to ensure they live a longer, healthier life. That is my introduction. So I've stopped there. Anybody hearing that think, no, he's doing something serious. I can just come and say we provide care for the elderly or we provide a subscription service for the elderly. Nobody cares about that. So I'm waiting for the next person. So when you talk, let people make or pay attention to what you just said. Find a way to hook them and catch them in the things you said. So for instance, Gerocare, for instance, if I say we provide care for the elderly, you will say, okay, good for the elderly. But the way I structured this, you know you are the one that is the customer of that business, not the elderly, because you are paying for your parents. But if I don't say it well, I miss out on that. So many times we introduce our business, just say we are doing this. Why are you doing it? Why should I care about it? That should come in the first few words. So in your pitch also, your problem and solution are key, but your problem should be a part that, encapsulates what's the passion in what you are doing. This problem needs to be solved. If I'm listening and I say, no, this thing, I need to join the train of solving this problem because it's a major problem. So slide 1, 2, 3, problem, solution, probably how it works. Then you have, how would you make money? So you talk about the problem, the solution, how it works. What is the business model? How will you make money? And the truth is that this is not where you become extremely innovative. People say they like an innovative idea, but don't like an innovative business model. It should be clear how I should make money. I shouldn't have to think far and wide and understand different things to understand it. Simple, straightforward. For Gerocare is subscription, on-demand, referral. Finish. Don't go and make any complicated revenue. How I will get my money should be as simple to me to understand as possible. So problem, solution, how it works, then how you will make money. Now, your market size, where will you make this money from? How large is this market? So we have what they call the total addressable markets. We have what they call the serviceable addressable markets. We have what they call the serviceable obtainable markets. So what I like to liken it to is a buffet. So a buffet is the total addressable market. Then your plates, at every point in time, how much food can you get in that plate? The plate is a serviceable addressable market. Then the serviceable obtainable market is your spoon. So the buffet is a total addressable market, how large it is. Your plate is a serviceable addressable market. How much can you take a hold of? And how much can you satisfy at every point in time is a serviceable obtainable market. So the buffet, the plate, and the spoon. And it's important to clarify this. What people usually hate, really, many times I've heard that the market is 100 billion. If I can get 1% of that, that's rubbish. They've heard that so many times, it makes no sense now. Say clearly how you will get your own part of things, how much revenue your own part to bring in that whole equation. Then your traction or RTBs. RTBs are reasons to believe. All these things I've said, what is the reason why you should believe me? That's the RTB. So what traction do you have? How many users do you have? Have people shown interest in your business? That's very key. Because no matter how beautiful the solution is, until somebody pays for it, nobody cares about it. The example I like to give is a company of mine I started way back. And in that time, I set up the structure. It was an interesting business. People loved the idea. Once I launched it, nobody bought it. So no matter how good they say it is, if they don't buy it, they're not interested in it. It's not a demand they have. So the only evidence that all this problem I talked about is a big problem, the solution is working, the business model is working and all that, is that people are paying you money for it. What's the traction? Peradventure, you are still very early. I don't have revenue yet. There must be people that have indicated interest. It's always important. If nothing else, just do a survey and have people say that, at the end of the day, if this solution is available, I will take it. Have people join a waiting list. That's at least some evidence. Though the solution is not out yet, but they've joined the waiting list. Then when it's out, I will pay for it. I know a company in the US that raised money based on a waiting list of 15,000 people. So today, they have not started. But the waiting list is what they've been using to get money. So that traction is key. Show traction. Make sure you show traction of what has happened and what can happen. If you don't have people already on it, be clear, because it's also for you to decide whether you should start or not. Just having an idea is okay. No, it's not okay. You must be sure people need that product, and I've given you evidence that they want it. Then we have the management team. All these things you've said, are you the people that can do this thing? So usually, when people look at a business plan, in the old days, we had business plans. Nowadays, it's just deck. But earlier on, people write full business plans. So in the business plan, what the investors look at is, first of all, the executive summary. They go to the financials and see if it's profitable. They now go to the market size and market structure and see if this market can produce a revenue. And then they go to the management team. Can these people make it happen? So domain expertise is key. Previous experience is key. All those things are key. So let them know all these things I'm saying. I can do it. If you've exited before, let them know you've exited. Even if you failed, let them know you failed and you learn from it. So the strength of the management team also has to be pronounced. So I was teaching a session at one point, and then they said, I'll get to that. So make sure you make those very clear. And finally, your call to action or future plans. What are you asking for? Is it money? If you're asking for money, what valuation, what we use the money for? What you plan to do. If you hear my pitch, I asked for the money and I told them our future, the larger vision, what we intend to go in the future. So these are the key steps for any pitch: the problem, the solution, the how it works, the business model, the market size, the traction or reasons to believe, the management team, and then your ask. So that is the content. So delivery is key. One, start with a bang, end with a bang. Because in between, they can get distracted. But catch their attention from the beginning. Peradventure, they forgot. Catch their attention at the end. But in between, let there be some key things. What is the backbone of your pitch? What are the 3 things you want them to live with? After they finish, if they leave that place, what are the 3 things you wanted to remember? Those things should be clear and should be pushed out with the emphasis during the pitch. So what are you building and for who? Why has it not been built before or done before? Why is it hard to do what you are doing? If you're able to get this into it, is also key. Why is this an opportunity to not be missed? So whichever way, try and pass these messages across, but start with a bang, catch their attention with what you're saying, end with a bang, but in between, have 2 or 3 or 4, let's say 3 key things you want them to take away, and make sure on those slides you emphasize it deeply, so if they forget everything else, they will not forget those 3 or 4 things you want them to remember. So the qualities of a great pitch. 1, clarity. The presentation is clear and simple. If you look back to my pitch, there were no big words. It was normal, simple, conversational English. How you talk to somebody. No buzzwords, no highfalutin things, not to make me sound extremely intelligent. Just pass your message across. I remember in a program in Owerri once, there was a guy that pitched, he sounded very eloquent, but at the end of the pitch, I had no idea at all what he was doing. So I tried to correct him, but he refused. On the day itself of the pitch, the judges were asking him, what does he do? Which means all he said were all big English, buzzwords, left and right, but nobody knew anything he was doing. So try and make your pitch as simple as possible. Simple English. Some people think if they make it too simple, they will not know they're doing hard stuff. No, we need to understand what you are doing. Secondly, excitement. The opportunity is compelling and grabs the listener's attention. One of the key feedbacks I get is that your passion shines through. You know, you're passionate about what you do. You have to be, the idea has to be pushing you. It has to be compelling enough. You have to be excited about it. Again, in the early days, so we're part of one investor program where we're told that in the last cohort, there were investors that wanted to invest in somebody. They had that check in their hand, in their bag. They wanted to have one last discussion with the founders. They had the discussion with them, but they felt these founders are not excited enough about the idea. The founders never knew the check of the investor because they did not feel the passion. They are talking about your business. It's something like you are reading a book or a script in a very boring tone. No, they must catch the excitement about what you are doing and be captivated. They say a sale is an exchange of enthusiasm. For somebody to buy from you, they have caught your passion, they've caught your enthusiasm, and they're willing to go forward. In the other way, if you don't sell, then it means the other person has transferred his own enthusiasm to you as a reason why he cannot buy. We have informative. So it teaches the listener a thing or two he did not know. It's always important something strikes out at him. So for me, my first slide was that as a Nigerian, before you get to the age of 40, there's a 75% chance you will have lost one or both your parents to untimely death, or have at least one of them severely incapacitated by a medical condition that could have been prevented. 90% of people don't know that. So that's something they never knew. And the new information for them, something they have learned from that session. What can they learn? What new information can you provide to them that they had no idea about? It also positions you as a leader in the space. It must be memorable. Stories stay with the audience. They remember it after you have left. So that's key also. Always bringing stories are key. I can't overemphasize that. Get them into your story and then let them understand the importance of what you're doing, especially that problem and solution part. Let them understand clearly how somebody can be affected, how a business can be affected if they don't use your service. So speak slowly and enunciate. Sound natural and not as though the pitch was memorized. So for me, for instance, I've said my pitch, God knows how many times. So no matter where you touch me or wake me up from, I can say my pitch from the last slide to the first slide, from first slide to the last slide, start from slide 5 and go forward. That's because I've talked about it, rehearsed it so many times. So I'm able to make it sound natural. I can move that pitch into a 10-minute talk, 20-minute talk, still the same slides, because it's now a part of me. That's how it should be. Practice, practice, over practice, know it too much. Because the more you know it, the more natural you're able to sound. Look at the audience. So unfortunately, with all these virtual sessions, you can't do that. But if you're talking to them physically, make sure you pay attention to them. For those of you that know about Toastmasters, it's key to join Toastmasters Club because it helps your public speaking. Don't use generic phrases like so and all the kind of things for transition. If you notice, my slides were transiting from one to another without it being generic. So I was telling one story and it moved through from the beginning to the end. There was no, this is the problem, this is the solution. So I'm doing this because of that. This is no, one story, but it captures everything you're talking about and everybody follows along. But it takes a lot of practice. So be declarative and not cute with your points. When you hit certain areas, for instance, the other pitches I gave where I state the awards categorically, you say your achievements. When you get to your achievements, say them as they say with your chest. I was teaching a Kenyan accelerator group where they say it's against their culture to, be too braggadocious. This thing is not bragging. It's something you did. And the idea is that if there are 5 people they want to invest in, why should they invest in you? You must state categorically clearly why you are different, what you have achieved. And so I've said that highlights your achievements. And speak naturally and don't use words you will not use in normal conversation. Speak naturally, don't use words you will not use in normal conversation. And design a great deck. So in this, I know many of us are experts at using PowerPoints, but I plead with you, get your deck professionally done. Don't do it yourself. I remember when I first of all pitched, my first pitch to Ventures platform, I used to think I was proficient in PowerPoints. When I finished pitching, the investors laughed their head off because of all the designs and all the techniques and everything I put in there. I thought I was an expert, but it was obviously very poor to them. And I see that multiple times. When I tell you, invest in a deck, create your basic deck and give a professional to design a deck for you. That packaging says a lot. The deck should be visually appealing, to complement the story and not dominate it. It should not have too many words. If you remember, my slides have very few words. Your slides are the picture to your voice. You should not be reading from the slides. You should not memorize what's on the slides. It should be a complementary to what you're saying. Everybody should be paying attention to you. Because if they can read what's on the slides, they can read faster than you. You'll have finished and you're still talking. So make sure all the attention is on you. And make sure the deck is beautiful. Finally, practice, practice, practice. I cannot overestimate this. I remember in the early days, I used to practice my pitch, say 100 times, 60 times, but now maybe I'll do it 5 times. I know it so well, I don't have to even think about it much when talking about it now. But it's because I've said it so many times. As Michael Jordan says, when he's shooting his free throw, it looks so easy because he has done it over 1,000 times without nobody watching. So when he's shooting that one time, that's 1,001 times. When you are on stage, you should have pitched so much that is a natural part of you, either on the slides or in the stage or wherever you are. That pitch should be a part of you wherever you go. So practice, 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 keep on practicing until they can tap you at any point and you can regurgitate that speech the way it's supposed to be. So I think I'll end there. That should have captured, okay. I have 20 minutes for questions. Thank you very much. But the truth is that the whole pitching thing hinges on practice. The more you pitch, the better you get at it. So do it over and over and over again. Watch yourself pitch, record it, hear it, make corrections, and ensure it's almost perfect. So that's all for now. Take whatever questions you have. I was able to rush this within 1 hour, so I should receive some round of applause. I didn't think I could do it. Emmanuel.
Thank you very much, sir. Emmanuel. Thank you very much, sir, for... Okay, he's here.
Hello, can you hear me?
Yes, we can.
Yeah.
Good afternoon. Thank you very much. That was a really insightful presentation, and I believe everyone has really gained a lot because it was really eye-opening, and I think it was really engaging. So we'll just leave room for question, maybe another 5 minutes, after which we can call it a day. Adedoja, over to you.
So for me also, if you don't have questions, you must say one thing. I need to know you are listening. So Emmanuel, subsequent ones, please, I want physical. I don't want we're not in COVID again. I want physical meetings.
It's all right. We will try to make that possible. So at least everyone can come down. For those in Lagos, they can come down to our Ikoyi office,
Who is
or
not
we
in
can do
Lagos?
it on a Saturday.
Who is not in Lagos here? I know Nelson is here. I know Adejoda is here. I don't know if
Mine Lagos.
Okay.
I'm in Owerri.
Owerri. Okay. Oh. All right. So same thing as last time. Either a question or a comment. Everybody has to speak again. Let me know you are
Yes,
listening.
sir. Okay, we'll start with Favor this time around. Favor, please unmute.
Hello.
Yes,
Hi,
hi,
Favor.
we can hear you.
Yes, so I thank you so much, sir, for this session. I don't really have a question, but I picked something which we would have to also work on for our pitch, right? And it has to do with the emotional part of it. You know, I used to just think pitch is business, like it's just business. You don't need all those.
Hello?
Yeah, seems I dropped off.
Hello, Favor. I think she has an issue with her network.
Yeah. Who's next? Let somebody else go up then.
Sorry, sir?
Let somebody else go up then. So,
Okay, sir. Stanley.
Your solution to someone
Oh,
else
she's
that
back.
will really.
so
Oh,
Favor, we
sorry.
can't speak for a bit. Can you repeat yourself?
Okay. I said, sorry. One thing I really picked from it is that emotional part of it, which I've not really thought it was really necessary in a pitch, right? So I've come to understand that it's not just business. People need to connect with the problem on a personal level, such that even if they are not the direct customers, they can take your story to someone else who will buy your product or your service. So that's really key for me. Thank you.
Thank you.
Okay, thank you, Favor. Stanley. Please, can everyone like get closer to their phone and like be ready to unmute as soon as we mention your name, because we're exactly wasting time.
In this meeting.
Sorry, sir.
Since only 2 people are in this meeting.
No, I believe I would like to believe that's not correct, sir. Bayo, I see you're back. Are you here this time around? Because we've called you at least 4 times on this meeting. I am literally praying to God that you unmute yourself and speak.
Okay.
Okay. Stanley.
Yes.
Okay, hi Stanley. Thank you very much. All right, over to you.
Sorry, I was
Exactly what I was saying. Stanley, you're not listening at all. Wasn't there?
Stanley,
I
Dr.
know
Ofrey is sure that you were not
Exactly
not listening.
no, sorry, I got a call actually. So I just had to end the call.
So what I'm saying is that as Emmanuel, this is exactly what I'm saying. So for virtual meetings, either we all have our cameras on or we don't do it. I can't waste my time speaking like this and people are not hearing what I'm saying. I waste my time here. That's why I want everybody to talk afterwards. So we're sure they were there. Because I know some people will not be there. Especially in the meeting where there's few of us. How many of us are here? And still only 2 people are listening to what I'm saying. I spent all this time here for 2 people. It's all right. I think we can end it now. I'm okay. So
Okay. Can everyone put on their videos?
No, it's fine. It's fine. It's fine now. All right.
No, I mean, I think
Like,
everyone should put on their videos.
You've not told. I think you were calling everybody by name, right?
Yes,
to share what
I know that. But everyone should please put on their videos now, please. Okay, hi Nelson. I see you. Hello. Okay, this I get expecting you to put on your videos, please. Thank you.
No, but I'm sure the
Stanley.
recording is available, right? Probably the rest can watch it, but I think I round up here.
Sorry, sir, come again.
I'm sure the recording is available, so the rest can watch at their convenience and get the information that was passed across.
Okay. As soon as they come back up, I really hope they'll put on their videos. All right.
Also send me a copy of the recording, please.
It's very hard to hear you. Come again, sir.
Send me a copy of the recording.
Oh, 100%. We'll do that. We'll do that. Okay. I guess Stanley, do you have a question or something to say? Hi. You're muted.
Okay, can you hear me now?
Yeah.
I said the only question I have, or the challenge I've been trying to figure out is around valuation. Like, I don't really get yet how to come about valuation. So some people say you look at other businesses, the market cap and all of that. Why some say getting an expert. So, but I want to, from his own experience, how do you get your own market valuation?
First of all,
from the pitch you also presented to us?
So first of all, were you in the first part?
Yes, yes, I was.
Evaluation. So watch the video, watch the first part. Because I'm suspecting you didn't hear that part and you didn't listen to that part.
You said that?
I spoke on valuation. I provided 4 or 5 ways to value your business. And basically that's what we did. So there's the comparing to other companies in your industry at your stage. Look at what their own valuation is. Benchmark against that. Do future projections and a discounted cash flow to know the value of that projection today. That's one also. Look at the multiples in your industry. So various industries have various multiples. For instance, in the health tech, they always say like 6x your revenue should be your valuation. And then the key is that you should use multiple methods of this valuation and find an average so that when they ask you how did you arrive at this valuation, you are able to explain. But I talked a bit about it in the first part of this class. That's why I'm saying you guys should go and watch the video. For those that are not paying attention much in that period, those answers are all there.
Thank you.
Okay, do you have any question with regards to pitching? That was the focal point of this class.
I was about to get to that. That's the question I'm asking now.
No, I think in terms of pitching, I think you already answered the question I would have loved to ask. Is about the storytelling. So I wanted to ask in terms of how to tell the problem and solution, but I think I understood the part he said. You shouldn't at any point say, okay, now the problem or now the solution. Everything should be a story all true. So as you're telling and it will also be emotional so that you carry everyone along. I think you answered my question.
Let me just help out. Who is speaking now? Is it Gift speaking?
You said?
Okay. Who is speaking now?
It's Stanley. It's me.
Okay, Stanley. Stanley, what business do you do? What's your business?
It's a fintech.
Okay. Now, what problem do you solve?
Okay, basically, it's for businesses that can't afford devices like the PS device and can't have access to credit. So we provide for them.
What does that lead to? What does that lead to for the business? Not having that process in place, what does that cost for the business?
Okay, not having access to funds, like they can't easily expand their businesses, and having those challenges of whenever you make a payment, always delay in confirmation. Because most times, let's say just yesterday, GT Bank had an issue. So most businesses that are using GT, that they're having challenge confirming transaction. But if you have other payment platform like a PS device and other means you can use to confirm, the problem is that most businesses cannot afford such devices.
And so what I was trying to say is that, for instance, the problem we are solving is that many businesses lose majority of their revenue simply because they cannot collect revenue the right way. And you add whatever issue you have to explain it. So you say maybe 60% or 40% of businesses fail, 800,000 businesses fail yearly, simply because they are unable to put in that thing you're solving. So the key is that families don't survive. children go without food, businesses crash. All because of this simple thing you're talking about. So you say my name is this. The problem I'm solving is the fact that majority of the businesses in Nigeria don't survive more than 1 year simply because they are unable to fill in that blank. That is the problem. But the truth, as I said, the problem should be massive. It should be painful enough. I should feel bad for that person that does not have a solution. It's not just, so when you get that picture, you will not be able to express it the right way. It must be a big problem. This thing you're saying now is all well and good, but the problem it causes for that person, because they cannot receive payments, what happens to them? What is the repercussion of that thing in their life and their family's life? Where would they end up simply because of that thing that you are providing? So that's how to give that problem. The problem we're solving is the fact that majority of the businesses are unable to receive revenue as at when due simply because of this, which leads to families going hungry, this and that happening, this happening. You know, let them understand this thing I'm talking about. It's not just a small fintech business. So it's saving lives. It's impacting the economy. If you say, what do you do as a fintech business to provide POS? It's fine and good. We'll forget you. So make sure that problem is compelling. Make sure the problem is strong. Then you can move to solution. After I hear that problem, I'm willing to hear a solution because this is a big thing.
Okay, thank you so much.
Everyone should recraft their problem, yeah, and then make it something people can relate to and understand what's happening. If they don't receive that, like if they don't receive that money, what happens to them? We should know the human connection to it. Yes, they didn't get the money, so what? The man cannot feed his family. Issues are taking place. Businesses are crashing. All those are the big things they are solving. All right.
Okay.
Thank you.
I do I have your permission to move to somebody else?
Yes, please.
All right. Okay. Nelson, I saw you raise up your hands at some point, but your video is off again. So I'm going to move to somebody else. Or are you here?
That was just
Sorry, sir.
the videos can be off. As in the session is over though. So the main time it should have been on was during the session, so we know you're all hearing and paying attention.
Yes,
So
sir.
if it's off,
Absolutely. Okay, Nelson, please go ahead.
Yes, so the device I'm using has to be plugged in currently, so that's why I had to quickly turn off my camera again. Yes, so this is just a bit of a follow-up to something the Ebi had mentioned during the presentation, which is actually also being able to identify who are the kinds of investors I'm talking to, and then using that persona to craft your messaging to them. So one way I know that in terms of when we've tried to speak to a couple of investors previously will be to, say, for example, speak to a founder that probably has raised through them, or someone that kind of like has an information around them. But in the case that you do not have that, how would you recommend that you try to profile the investor you're possibly speaking to, and then craft your messaging to be able to ensure that you're saying the right things?
Go to their website. So you go to their website. In their website, you see the companies they've invested in, things they've done. You see their blog, you see their style of talking. All those things are there. If it's an individual, there's nothing much you can do. Just you balance it out. But if they have a website, go to their website. You get as much information as you need. Or if they're on LinkedIn, go to LinkedIn, chat. You know, just stalk them basically. Stalk them online. You will find information about them. Google their name.
Okay, sir. Gifts.
All right. So thank you so much for the session. So on that thing, like I've listened to a lot of pitch trainings and stuff, but this particular one becomes very personal because we're able to see a life example of where you pitched, and you know, like we were actually connecting the dots to how we also would pitch, right? So for the last part, which you said about practice, is very important, right? And the essence why we need to practice is not just because we need to sound like we don't need to miss our words, but we need to sound in a kind of conversational way. So when you're already used to it, so, and I think that that's one of the many founders that are already long in the game fail to realize, because maybe they've been doing this for a long time. They feel I just jump here and just talk, right? And especially when you're given the time frame to speak, you get to realize that you've not even gone far, you've not even explained everything. So I think that practice also help so that you'll be able to make your conversation very friendly, and you'll be able to pass in that message in the shortest time possible. That's one cutting again. Outside of that, things which they've actually mentioned. So I have a question, right? We're a renewable energy company, right? So we do normal traditional renewable energy services like solar installations. We built. Okay. Can you hear me? Can you hear me now?
Maybe better now, yeah.
All right, great.
Yeah.
All right, great. So we do the normal traditional renewable energy services like solar installations, we build solar generators, and develop solar microgrids and all, right? So now we have a software platform we're trying to build to accelerate what our services thereabouts, but it's still under the business, right? So we have a name for it and stuff like that. So sometimes when we pitch, right, there's a scenario where you have to talk about maybe what you are going, the next stage of which you're going to, right? And you want to find a way to merge these two. The core major business you're running actually solve a problem. Like it's something that is pitchable, investable, right? But you have something, a new product that will actually help accelerate that. So, and sometimes the problem statement of that new product might not be exactly the core product
Who is
statement.
the customer, the new product?
Of the new product right now. Okay, great. So the customer of the new product is still the existing customer, but it's not like it's a two-way thing, because we're trying to also get, it's more like we're trying to, just like real estate. So you're trying to also get people that will also put in money. So those people are also putting in the money, are also a customer, right? We have the normal end use customers where we supply electricity to these people, but we have the sponsors that will also fund these projects thereabouts. So those are two end customers now, right? So that's where the dilemma sometimes comes in. So you will just
thing is that the people that are the customers, what problem are they facing?
okay, affordability really. So they can't afford. Yeah.
Okay, so yes. Okay, go ahead, please.
All right, great. So affordability has actually been what we've been talking about, right? So most of the people, even currently, right, that we supply power to would have not afforded solar power. You have never been into this, and especially in rural communities. So we can.
What problem
Yes.
the platform now solving for them?
Okay, it's still solving that same problem of trying to get this power to these people that can afford it, but through a different model.
So now, the people using your original products, have they been complaining about any issues? Is that why you're creating this new solution, or you're creating a solution just because you can?
No, exactly, right? So we have large scale users, people that need large power. So we can't actually solve their problems, but they keep coming, right? So for us to solve their problem, we can't afford to sponsor that project ourselves and make them have a financing option to pay. So we have to find a way to bring people in, right? So, and that's where we're trying to go. We're going in gently, but our normal customers really actually, this problem is being solved for them because they're low energy.
There's some thoughts running through my mind. I don't know
if
how you connect afterwards, just to explore it
more. Okay.
So connect with me afterwards. Because I know there's a theory there to connect both things together. I don't spend time now thinking and brainstorming and then coming up with a solution now.
Exactly. Okay, great. I'll appreciate that.
An answer to it.
Okay. All right. I appreciate that. Thank you so much. Thank you so much.
All right, sir. Bio. He was here a minute ago. Bio. Please unmute.
Welcome.
We can't hear you. We still can't hear you.
If you can hear us, do a thumbs up, please.
Can you hear us? We still can't hear you.
Okay.
while you solve your audio problem. Abdulaziz, are you here? That's the last person.
Yeah, we surpassed the time already, so.
Sorry, sir, come again.
I said we surpassed the time already, so.
Oh, yes, we are. We are, and we don't want to take any more of your time. Emmanuel. Hello, Emmanuel. Okay, but if you have any questions, you can send it as a message and I can pass it to
I can
Dr.
hear
Ofrey
you.
a bit later. Yes, so we're done with the Q&A session, so you can round up. Thank you, Dr. Ofrey,
Okay. I want
for your time before I log up. Stop talking. But thank you so much for your time today, sir. We're really grateful. It was a lot of information packed in 2 hours, and I know it was probably
Manuel
extremely
made me go so fast.
Come again.
Say, Manuel made me go so fast. I'm usually more relaxed, but the 2 hours time, you speak very quickly.
Oh, I'm sure it was extreme.
I apologize. It's just
Sorry,
because
sir.
I equally understand that some of the persons might equally be maybe at their places of work, and these hours are hours that they have set aside to attend to these classes and sections. That's the reason why I wanted it to be between the time frame when they will be having their maybe break and equally be able to join and get the best use of the sections. Once again, we want to appreciate you on behalf of Olisa Agbakoba Legal.
Thank you,
we
sir.
are truly grateful for the partnership. We are grateful for always answering to our call and coming and sharing your wealth of experience and knowledge with the cohorts. Once again, we say thank you very, 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 very much. So to all participants, we are grateful for your participating at the second cohort of the Set Growth Capsule. We will ensure that the recordings are shared. And for those that equally want to have maybe one-on-one communication with Doctor, I don't know, Doctor, if I have your permission, we could equally include your email and maybe a copy to us whenever conversations want to go. So that for those that could not ask questions and for questions that are personal, they might want to direct it to you after the section, because it's one of the things we do. We try to, as much as possible, equip them with the necessary knowledge and equally guide them legally with respect to their needs, and if possible, connect them to opportunities where they can equally get possible investors. So once again, thank you, Doctor, for your time, and thank you, everyone, for today's section. It was nice having all of you. So have a lovely afternoon. Adedoja, thank you very much for being a good moderator. We truly appreciate. So do have a lovely afternoon, everyone. Bye.
Thank you. Bye.